Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, traders and investors. Welcome to this Monday edition of Benzinga. It's not a Monday. It feels like a Monday because it's Tuesday. An edition of PreMarket Prep brought to you by Thinkorswim. I'm Spencer Israel. Got a full crew today, Dennis and Joel. Joel's back with us from Florida. He has chosen to come back to the frozen tundra of Detroit. So Joel, welcome back. Hope you all had a nice holiday weekend and you're ready for this nice, easy, quiet, low volume, relaxing week in the markets. We're going to talk about today. Today is officially day one or day two, I guess, however you want to do it, of the Santa Claus rally. So we're going to talk about the Santa Claus rally and what that means for your favorite stocks, and the strong get stronger and the weak get weaker and all that good stuff. We got two guests on today at 8:15. We got Alan Brockstein on to kind of give us a yearly an end-of-the-year review of what is what in the marijuana market and what to expect next year. Also, since it is Tuesday, we are chatting with our boy Nick Shaheen, our options expert and the author of Create Income with Option Spreads on MarketFi. Joel, you're back from Florida. Surely you must have at least one good story for us.
One good Florida story?
Yeah.
Besides it was just too hot down there, and like I had to go swimming like 3, 4, 5 times a day. Besides that, well, one good Florida story. You know how I like the ponies, the track? Well, I drag Lisa and Dana and my mother-in-law and my wife to the track at least once when we go down there. So we go to Pompano Park, and I have a tradition that if I cash on a race, I don't like to leave. I don't like to leave on a winning note. So what I do when Lisa makes me leave is I bet $2 on a race, and I tip the guy that, takes us back out to our car, and I give him the $2 ticket. And I did this one time before, and the horse came in. Well, I bet $2 to win on number 3. It's Mad About Money. And I gave the guy, I go, you better check the winner of the 9th race because this ticket could be worth something. Well, I get home, I sign on the internet, and sure enough, the number 3 horse won and went off at 10-1. So the guy made $20 off and plus I tipped him $2. So
what'd you make on this?
Nothing. I gave him my ticket because I was leaving.
You didn't bet on it too? Well, you're supposed to bet as well.
No,
you put like $50 on it?
No, not on that. On the race before I did. That's why you have to stay. You can never leave on a winner. So that guy got a nice tip.
You're like Let It Ride, like that movie, Let It Ride.
Exactly. But let's.
Do you ever let it ride? Have you ever done that?
No, I always try and walk out a winner or lose at my maximum, which is not very much at the track. So, no, nothing like that. But let's get to the markets here.
One thing, just if you don't know about Joel, is, if he knows his stocks well, but he knows his horses better. I'll give you that. You're pretty good at the horses.
It's fun. I like doing it. Been doing it for a long time. But moving into the markets here, not a lot to talk about. S&P futures trading up $1.25, 22.61 and a quarter, clearing Thursdays and Fridays high. Only one number on the upside. That's the all-time high, 22.73.50. Crude, looks like they're sticking with things here as far as the cuts in production, $53. Crude been a good performer this year. High the move, a little bit above this. We are now looking at the February crude. High the move has been 54.51, basis the February contract. Gold and silver in the green here. Gold trading up nearly $10. And Dennis said you already came in, and did you have a fun week without me?
We always have fun, Joel, but we missed you. Everybody in the chat missed you, so we're glad you're back. We're jealous of you being down in Florida when we were fighting these cold temperatures. And then you brought the warm with you, because yesterday it was 55 in the Motor City.
Yeah, I guess Downward Dog missed me the most because he signed on Monday morning at 8:13 to see if the show was on.
And it was not. So sorry we didn't have a show there yesterday, but we had to take the holiday, plus none of the markets were open, so there wasn't going to be very much to talk about. But
and I had to go see Star Wars again. So I was busy. I saw it twice over the weekend.
Twice?
Yes.
What'd you think?
It was so good. Oh my god.
It's good, isn't it?
Yes. It was so good that when I left the theater for the first time, I I don't know how to describe it. It was like a cathartic experience. It was like I was super emotional. I was overcome with like the emotion of the film that I like couldn't talk, but I like couldn't stop smiling either. So I was like I looked like this goofy like idiot. I was like walking out of the theater. I had like a grin on my face, but I couldn't say any words because I was like still digesting the movie, and I thought it was great. Just
It was good.
fantastic.
We'd love to talk details with you, but we don't want to give anything away. But
No
and yeah, was already saying,
spoilers.
no spoilers. Don't give us any spoilers. So we won't give you spoilers. But, I was disappointed. And I said that on the show after The Force Awakens. I was disappointed with that show. And then I read a New York Times review of the new one and the Rogue One. And it wasn't a good review. So I went into the theater with very low expectations. But man, I tell you, it blew those low expectations away. I think if I would have went with higher expectation, I'd blow away. It was good. I think it was one of the best movies since the original three, if not the best movie since the original three.
Yes, and it's as far as box office goes, it's pretty much second in line now to The Force Awakens last year. It surpassed $500 million worldwide. $26 million on Christmas Day alone is the second biggest in history, behind the $49 million from The Force Awakens last year. Uh, yeah, I mean, I'm with you. It was just as good in every respect as the originals, maybe if not a little better than a couple of them. But yes,
The
totally
stock has
in
held up
love.
pretty good too. I mean, we've had the Star Wars run, and we thought, well, maybe it's going to give a little bit back once the movie comes out if it flops. But I think that it's been overall pretty well received. I mean, especially from me and you.
And we said this like a month ago too. It was like, watch out for that Star Wars rally. But the movie is really good. I guess this is what happens. I
It's just kind of hanging out here right now, and we are coming into Santa Claus season here. Though I know Santa Claus came for everybody over the weekend, but for the market, it typically comes this week. The Santa Claus rally, as officially defined by Hirsch from the Traders Almanac, is the last 5 trading days of December and the first 2 days of January. A lot of people just call this week though the Santa Claus rally. So, and anyway, whatever you want to call the Santa Claus rally, it is this week. So these next 4 days typically are 4 of the stronger days of the year. So Santa Claus coming to town. Do you think, Joel, that this continues? Like, I mean, everybody's saying we kind of already have had our Santa Claus rally. December has been great for stocks. A lot of stocks, especially if you're a bank, have been up significantly in December. Does the run continue here as it is tradition?
Actually, Santa Claus is Donald Trump. For you that
Yeah,
haven't
yeah, the Donald
told your
Trump.
kids yet about the real Santa Claus, what's going to knock the market down this week? Very few earnings. Analysts are on break. I mean, really nothing. Just climbing here. Probably get the 20,000 out of the way here. Dow went off the board at 1933.81 on Friday. Big hurdle. That'd be a nice thing to talk about on New Year's, how the Dow hit 20,000. So that's what I'm looking for in the overall market. Slow roll north is for you traders in Star Wars in Disney here. Triple top at the 106 area. Someone trying to get out of a position there. Three highs last week: 106.26, 625.91. So that's what we're looking at on the upside. On the downside, three lows at the 104.60 area.
Okay, let's just jump over into well, let's continue talking Santa Claus Valley just a little bit here, because one thing I will say is typically if you don't want to talk Santa Claus Valley, talk the end of the year trading. What happens typically end of the year is, and this is just typical. Obviously, we live as traders; we can't live in the absolutes. We live in probabilities. But what typically happens is the strong get stronger and the weak get weaker. And why is that? Two reasons. The reasons the weak get weaker is because you have tax loss selling at the end of the year. The reason the strong get stronger is you have window dressing from your major portfolio managers. And obviously, looking at that, you look at a stock like Nvidia and you think, wow, well, if you're talking a stock that everybody wants to have in their portfolio, if they're a portfolio manager, it's probably Nvidia. Nvidia has continued to march here. I mean, this has been incredible here. $85 a week and a half ago. Now it's up another 2 points here this morning in a sleepy market. There's hardly anything up here this morning, just kind of all hanging out flat. Not Nvidia. They're coming in with their buying shoes on, and NVDA here again. It is trading up over 2 points in the pre-market. These are all-time highs. Levels are going to be a challenge for you here, Joel.
Yeah, there's no levels, Dennis. 112.62. That's what you hit here in the pre-market trading. Nvidia is my new Tyson chicken here. I am fighting this one here, but I didn't go with anything short term. I went with some Januaries and some Februaries here. Puts way down. They're probably not even listed on my Thinkorswim platform anymore. But what you're going to see is why sell this stock now and pay taxes when you can sell it if you want to sell it in 2012 and to have much lower capital gains as the Trump White House is talking about. So 112.62 here. I don't know, downgrade or something. But right now, there's only one level on the upside. Mention it again. 112.62. That's your pre-market high.
Yeah, if you're looking at it, if you're thinking that's going to be the trade, then you start thinking, well, maybe January 1st, maybe some sellers, some profit takers do come in there. But again, we're on the trade date now. We're not on the settlement date anymore in the U.S., so people can continue. If you were to sell this thing on the 31st of December, you're going to have to pay taxes on it. So it's not on the settlement date anymore; it's on the trade date. They changed that a few years ago. So it's not. If you're just thinking it's from, if nobody wants to sell it because they're going to have to pay the tax, then the selling may not come until early January.
All right, let's before we go to our first guest, Alan Brockstein, to talk a little bit about marijuana stocks. Few stocks in the chat here, and what's going on with SGEN? Yayo wants to know. Let's take a look at the price action, and you guys can hunt for the news here.
The beats.
What's going on in Seattle Genetics?
It's a clinical hold on several phase 1 trials.
Not good news. And if you look at this board, you're saying, what are you talking about? It hasn't even made a trade yet. It is offered at $54. It closed at 61.86. It is offered at 54, and nobody is lifting that offer. The best bid is way down at a penny here. So when I'm looking at this thing, I'm thinking could be some trouble here in SGENville.
Look at here. We got a lot of air between 50 and 60 here. $50 maybe. I see four lows there. I see one spike low at the end of October here, but kind of hard to give some price action until you actually get a trade in it. And was there one other stock in the chat here?
Is it halted right now? Question.
Well, I'm not sure.
Because I see an offer there, and that you can throw out offers and you can see them there, but I don't even see marking on my other platform.
They were
I'm wondering if SGN is a halt.
There were apparently 4 fatalities in this.
4?
This
Yes.
doesn't sound good. In any regard, there's been no trades because everybody's scared to where nobody wants to throw a bid out there right now. So best bid I could see in the book right now is a penny. Obviously, not going to trade down to a penny, but this is going to be interesting to see once it actually makes a trade where it opens at. Because it looks like it's going to be weak.
All right, and CGI, Celadon Group. I don't see much trading action going on.
No, I think CGI was talking about the CGI in Star Wars, wasn't he?
Oh, really?
This is how much Joel does not follow Star. There was some good CGI in Star Wars there, where they had. I won't say. I don't want to put any spoilers, but there was some CGI in Star Wars, and I think that's what he was talking
CGI?
about. If you want to talk about Celadon Group,
Yeah,
it's funny. It's a ticker symbol.
That was funny. There was some CGI that I didn't even know. I didn't even realize it was CGI, and I thought I can't even say without spoiling.
That's not.
So never
People
mind.
don't even talk about CGI. Where are you guys
No,
coming on with this stuff?
I can't say it without. I'm not.
Okay,
I'm
don't
done.
say it.
I can't.
All right. Instead of Spencer blowing the Star Wars movie for all of you, we are going to take a quick break, and we're going to bring in Alan Brockstein, and we're going to talk about marijuana stocks. He's a MarketFi maven and the author of the 420 Investment Letter.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Spencer Israel and Denton Stick. We have Alan Brockstein on the line, Market 5 maven and the author of the 420 Investment Letter. Alan, you did not draw the short straw. We always love having you on the show.
I'm glad to be here. There's been so much that's happened in the last 2 months since I was on.
All right, 2 months. Well, 2 months. We could talk 2016 as well. First, let's go to the last 2 months. Tell us what you've seen in the marijuana sector.
So we were thrown with a real what they call them, a curveball. When I came on last time, I think everybody thought Hillary was going to get elected. So that didn't pan out, and there's some big implications. But we did talk about all these state elections, and it couldn't have gone any better. Florida voted to go legal for medical reasons, 71.5% margin of victory. And then of the 5 states that were going just legal, only Arizona failed. So we got Massachusetts, which is the first big East Coast state. Maine just squeaked by, so another East Coast state. The biggest of all, California, going legal, and then Nevada as well. So it was kind of a tale of two cities, best of times, worst of times. The best of times, all these states going legal. Worst of times, very uncertain about what's going to happen going forward. And this is something that really hurt the market. I don't think there's a problem with Donald Trump per se, but it's not a big issue of his. And one of the first things he did was appoint Jeff Sessions as Attorney General. And I don't think you could pick a bigger hater than that guy.
Let's talk about the economic impact of the states that have previously approved, marijuana, whether for legal or recreational. I read a statistic that in the states that have approved it, either way, have actually saw a significant increase in population. Do you think that's coincidence, or you think that's something related to the different laws?
I don't know exactly. I think you're right. I've seen those numbers. People are moving to Oregon. People are moving to Colorado, no doubt. But that may just be demographics. There's been a pickup in home prices in those markets that have been above average. But I think the more important thing to look at is what's going on with tax revenues. And those tax revenues get recycled into the schools as well. And so it's been very favorable on that front.
All right, so let's get into some individual issues from 2016. Let's get into a couple of the winners and cover a couple of the losers.
Yeah, not that many losers this year, believe it or not. Really an amazing year. So I started this in 2013, and that year ended with a late rally. So the year was actually a positive year for people investing in the sector. 2014 got off to an incredible start, but then it imploded. So it's just a terrible year. 2015, a terrible year. This year, whether you're investing in Canada or the United States, you made money. So hard to find too many losers, actually. A lot of winners. One of the ones you guys like to talk about a lot, turned out to have a great year, was GW Pharma. And I know I talked about them last time I was on. Since then, it was kind of cool. There was a meeting in Houston where I am, where they were presenting to the American Epilepsy Society. And they kind of stole the show, from what I gather. I didn't go to the show, but I went to a analyst dinner that they had. And that story is on track. So that'll be an interesting one to watch in 2017, because in the first half of the year, they'll be submitting their new drug application, or NDA, with the FDA for Epidiolex, which treats epilepsy. And that thing's looking pretty good.
What do you think of, obviously GWPH, we've talked about it as kind of being best in breed. Do you still have that opinion of it? And do you think, it's been a pretty good year. If we look just 2016, this year stock started the year at 60, went to almost 120, so 114, almost doubled in 2016. Do you think GWPH, could have a similar 2017?
I think it could do well, but it's probably going to be back-end loaded. There's no catalyst in the near term. The next thing on the agenda is to get that new drug application filed. And so I think even then, biotechs are kind of tough when they're in this wait and see period. So the approval itself, if it comes, hopefully not an action letter, would be late 2017 or early 2018. So I think if the company is able to get Epidiolex approved, there's some upside to the stock, but I don't know that traders are going to run it up too far in advance of that.
Symbol coming from the chat. Don33 wants to know MJNA medical marijuana. It's on the pinks. Do you follow? Well, you follow them all. But what are your thoughts here?
Follow it.
You follow them all. What are your thoughts on MJNA?
Sure. So, well, it's kind of interesting. So I would ordinarily just tell people to avoid it, period. They've been around. They were the first one to start trading publicly. It's over 3 billion shares. So, you're talking about a 440 million market cap or something like that for a company that's doing, their sales are in decline. They don't generate positive cash flow. They have a lot of toxic debt on their books. So it's pretty much an avoid anyway. But wow, we just got hit with a big surprise earlier this month. The DEA created a new code for marijuana extracts. That's what these guys sell. The business model for MJNA is to identify hemp in Eastern Europe, convert it, and bring it over and sell the CBD that comes from it. And they've always said this is federally legal and legal in all 50 states. Not exactly correct. And the DEA really threw some cold water on that, and it's unclear what's going to happen. But the DEA is basically now saying that this is illegal, what they're doing. So it's if this continues to roll out the way it looks, this company could face some big problems to go above and beyond the ones that I've already noted.
Going back to the GWPH, I'm looking at that. I've been following Sarepta, right? And the whole thing about their drug, Etipleurosin, much anticipation, big run up. I mean, the stock is at $30. It comes out. They jam this thing to 63.73, and now it's right back down where it was at, under $30 before that ever came out. Do you see that? I mean, how long we've been talking about Epidiolex with you here?
Yep.
Yeah, I mean,
years. That's right.
A couple years. I mean, do you see the same potential here, that it's just like all this hype? I mean, I don't even know what the market is for it, but I mean, do you see that kind of run already happening before it's already approved?
So a couple things. I don't know the Sarepta story. If it's not cannabis, I'm not really paying much attention these days. But a question for you: did they have to raise equity after they did that deal, or were they fully funded?
That's a great question. I think
because I think
no, they raised. They had a raise.
Okay, so GW doesn't. That's the first point I would make.
Great
GW
point.
has like $500 million in the bank. So that's the first thing. They don't have to raise. And then the second thing I would say just is it depends. A lot of times if they run it up, that is the reaction you get. I don't know that they will run it up. This is the first real cannabis company drug, I should say, to face approval. There's going to be a lot of doubt about whether or not it'll get approved, whether that's merited or not. I look at it as what's it really worth, and the math I'm doing says this really could be $1 billion drug. It'll take a few years. Going to that conference, so at this dinner that I went to, they had some doctors speak about it. And the thing about Epidiolex that people may not understand, it's not a first-line drug. It's to be used in not in monotherapy, but in combination therapy. But these doctors all made it sound like the doctors are just going to use this instead. So I think the estimates I've seen are that this could be $1 billion drug within a few years, and that makes sense to me. And so I don't see a big sell-off, but if the stock's way above what it's worth, sure, it'll sell off.
All right. I mean, you talked about how they presented at the conference. What was your takeaway from the K's conference call?
From GW's conference call?
Yes.
Oh, so, I mean, I just think the story's on track. I think, like I said, I think the main thing is so epilepsy, these rare childhood epilepsies are just not well treated with the current drugs, and there hasn't been much innovation in many years. So, the thought process has been to add Epidiolex to these other terrible drugs, and that's the way these clinical trials were done, and it helped. But it appears that you don't even need many of these other drugs. So the doctors are really excited to be able to pull these kids off of toxic drugs and just get the benefits of seizure control from Epidiolex. So I think the other thing that's interesting about GW Pharma is they're not a one-trick pony. They've turned into one for now, but they have a pretty rich pipeline, and we'll see some other things come out of them. That's one of the other things that I hope will sustain the stock next year.
Let's take this to the Canadian markets because we do have a lot of Canadian listeners, and we've already got some
Oh,
symbols
happy
coming.
Boxing Day, everybody.
Yeah, I know. It's actually a holiday. You know, they give you the extra day in
Celebrated
Canada.
today.
They
Yep.
give you the Boxing Day. But CARP, I don't know if this is his name, CARP, he wants to talk about ACBFF, which is one of the bigger Canadian companies, Aurora Cannabis. Is that
Yep.
the biggest Canadian one, or do you
No, so right now they have probably the second largest market cap. The biggest is Canopy Growth. And, for the people that have been listening, we've talked about these for a while. This market had just an incredible year, including Aurora. And I've been very bullish on this sector. And it was like a light bell went off a year ago when Justin Trudeau got elected. It was real obvious that this was going to be a game changer. And for those that aren't familiar, Canada has the only federally legal medical cannabis program in the world right now, or at least in a large country. And Germany may be joining them next year, but they're moving towards full legalization, which is a really tricky thing because that's really against the United Nations treaties. So we'll see how that plays out. But Canada's in this very interesting position where you have a limited number of producers. Aurora, the question was about that, was one of them. They were one of the more recent ones to start producing, but there's now 37 licenses that have been handed out. I just wrote an article on Canada called "Why Cannabis Investors Prefer Canada." I published that on New Cannabis Ventures. And so I point anybody to that if they're not familiar with the market. It's just so much easier to operate when you're federally legal. And I pointed to some tax issues as being a really important part of it, but also the access to capital. And so this year, and Aurora was one of these companies raised over 500 million Canadian through equity and warrant offerings. And that doesn't even include some of the warrant exercises. And so in the United States, that's about $375 million worth of capital raised. The medical program is zooming. And so to the question about Aurora, the one thing I would really point to about that company, they have added patients like crazy. I mean, it has been phenomenal how quickly they've added. I want to say it's 8,000. It might be even more now. Patients just very quickly from zero at the beginning of the year. In general, that whole system now has over 100,000 patients, but there's actually a real shortage of capacity right now for the country as it goes fully legal. That's probably not going to happen until like April of 2018. So there's some time. So these companies have been raising capital hand over fist, but it's all to be deployed into adding to their capacity.
The big question I have as an outside investor, and obviously not with a focus on the marijuana sector, is you said 37 licenses in Canada. When this goes full legal, do you think they're going to start handing out licenses to all kinds, a whole bunch more licenses? Or are they just planning on, keeping it well controlled? And maybe these 37 licenses is, there's not going to be that many more. So these companies that have these licenses are really going to benefit. Or do you see it just opening right up?
So in the middle of that, I think there will be more licenses. One very interesting license will be Shoppers. I know you're familiar with that company. They will be selling cannabis. And so I think everybody needs to understand what it's going to be like, that pharmacies will be selling cannabis, and there'll be some other new licenses as well. At the same time, I don't think that it's going to be like Colorado, where there's 500 licenses. Colorado is a lot smaller than Canada, a lot smaller. So it will be very controlled. At the same time, I used to think that there wasn't much of a advantage to having an early license, but I corrected that thinking after I realized they weren't going to have a gazillion licenses. So it's one thing to produce in your basement. It's another thing to produce, a small commercial grow. But now we're talking about these massive scale productions that are literally over acres, greenhouses that are like 7 acres. And so the companies that are going at it right now and scaling up now, I think are going to have a competitive advantage for a while in terms of understanding how to scale and to be a low cost producer.
One last one from Canada before we let you go, Alan, too. I've got to ask you. It's from my local hometown where I was born, Leamington, Ontario. Afria. I've talked to you about this in the past
Yeah.
as well. I think I ask you all the time. I have been on holidays, and I went down to Leamington, and I had at least a dozen people over the last couple of days. What do you think of Afria? What do you think of Afria?
Yep.
I was like, I got to ask my buddy Alan Brockstein because I don't know anything about Afria. I don't know anything about pot stocks. But I said, Alan knows. And they were telling me they're building a power plant now or something. And
Yeah,
I
that's
I
true.
look at the stock; it's went from like $1 to $7 in Canada. Came back to 4 here. What is Alan Brockstein's thoughts about Afria?
Yeah. So actually, we talked about that a couple months ago, and that happened to be the day that they announced their Arizona deal, which is kind of interesting, which we can get back to in a second. But so Afria is these are flower growers that have learned to grow a different kind of flower, and but they're growers. They know what they're doing, and as I said last time, their original business model was to be a hybrid, they want to be a low cost producer because they're using the greenhouse where you can get a lower cost of production. And they wanted to supply both patients directly as well as other providers to be a wholesaler. And so they were so successful with their patient business that they kind of decided that they weren't going to do the wholesale business. But then with the move towards legalization and with what's going on, like I think they'll be a supplier to shoppers, for instance. And so the guy that runs it, Vic Neufeld, one of the more highly regarded CEOs in the space. He used to run Jameson, a nutraceutical company that was acquired. So he has a good record of success. These guys, uh, they'll probably uplist to the TSX. I would have thought they would have said something by now. Not quite yet. So at this moment, Canopy Growth is the only one that's uplisted to the TSX. This week, a new IPO, Canamed, starts trading on the TSX. So it really tells you kind of where the Canadian sectors. So Afria has the U.S. investment in Arizona. This is one of the largest production facilities in the United States called Copper Farms, and they own, I think last time I talked to you, it was going to be 10%. Now it's going to be 15% of that. So that's a little different from these other Canadian companies that tend to focus either on Canada or Germany or places like that, not the United States where it's federally illegal. So but great company. I think that's awesome for Leamington. Free is going to be one of the big ones.
Alan Brockstein, MarketFi maven and the author of the 420 Investment Ladder, giving you a great outlook on the cannabis sector. Alan, great talking to you as always. You're one of our original guests. We'll get you on back in early 2017.
Okay, Happy New Year, guys.
All right.
Thanks, Alan.
Quiet in the S&Ps, Dennis, trading about $1 from where we were, 22.6150. That's up $1.50, knocking up right against the high there, 61.75. Is there enough traders and investors out there to create any imbalances?
Let's go take a look and see. The few to the sell side, Twitter 67,000 sell. Joel, Twitter had a rough time when you were gone there. We lost a couple execs. Also, I don't know. There's just a plethora of bad news. It did bounce off the 16 level on Friday's trade. We got down just to 16.16, and we did bounce up and closed kind of strong at 16.50. Little sell and balance in here this morning, but this stock chart looks broken to me. I want to get your quick technical thoughts before we bring on Nick.
I'm liking it down here. I didn't like it up at
You like it here?
Yeah, look at that. The little tax
Why?
selling.
Why do you like it here? Because you got to be one of the only people that actually like it here.
Dennis, I've liked it since like $40. Okay, so I'm gonna like it here. I don't know, little bid supported 16 back in August and September. Also a little bit in October. Potential double bottom here. I mean, what I like about it, you're putting a trade on here. You know what the old time low is, 13.73. If you're buying in the 16 handle, getting rid of the bad execs, could have a bump up in MAUs after the election. So I mean, they need a good print and they need a good quarter. But I mean, just year-end tax selling, I think, is weighed on this one. All right, should we bring Nick in on the fly here, or do you let's bring
Nick in on the fly.
Nick on the fly. Yeah, we'll get his thoughts on Twitter too. I still don't like it.
He'll say, just put it away in your portfolio, forget about it.
Forget about it.
I'm not sure Nick
Forget about it. Forget about it.
He might say write some low puts on. Nick, how are you? How was Christmas?
Christmas hit us like a train wreck.
Oh no! What happened?
Why?
It always does. It comes in a whirlwind and then boom, disappears.
Well, we got Santa Claus coming to town this week for the stock traders because this is the official start of the Santa Claus rally here.
Santa Claus moved out of the poll into the mainstream timeline. So Santa Claus has been here for like a month or so. So, I mean, what do we expect more than what we already got? It's pretty incredible rally.
Being greedy, you think, if you're just sticking around for the next 4 days trying to go after the last little bit?
If you think that the door is going to be wide enough for you to squeeze through it, sure. I mean, it's like playing chicken. You know there's an accident coming, yet you're going to hang on to the steering wheel as long as you can, thinking you can, zig or zag out of the way at the last minute. What's wrong with missing on another point or two upside?
So is it at the point where you want to start shorting this thing or selling some credit credit call spreads on the upside, or because man, the last week or so I was looking at the ranges in the S&Ps. This is just an option seller's dream. Tight ranges, low volatility, or not you're not trying to call top yet.
Well, it was tight for a long time, and then it blew up. And it caught people who sold too short. The weeklies, if you sold credit call spreads, you pretty much got challenged really hard. So it's difficult to do that. If you want to sell anything, you're going to try to play the range, so make sure it's balanced one way or another. So you either sell credit. Are we live, by the way?
So you were live.
Okay.
We're going.
So you basically sell credit call spreads that are out in time. But if you want to play the safer and balance it out, if you don't trust the credit put spreads, you balance it out with a shorter term add to money calls long. So you can benefit from the momentum. The default move is up. If nothing happens, we're going to trickle higher, it looks like, every day. So why not have some calls for overnight bookings? But if you want it to be bearish and build a bearish position, what you can do is buy further out puts and finance them partly by selling shorter dated bullish positions like a credit put spread, or sell puts against them in the short term. For example, if I wanted to short the SPY for February, I would buy a February put at the money or thereabouts, let's say 225 on the SPY, and then I can sell puts against it shorter dated that will expire hopefully worthless. I don't create extra risk because I'm covered, because it's like almost the inverse of selling covered calls. But I lower my entry point in that put, so I'm building a bearish position if that's my thesis. So yeah, why not be a little bit bearish? Because we've been bullish for so long, and part of the thesis of being bullish for so long is the 2017 tax shelter or whatever benefit that we're going to get. So if nobody wants to sell now, it's just a matter of days to spill into 17. What if that actually is some sort of a trigger for a little drawdown?
Do you think January 1st comes around and everybody says, book those gains and starts selling stocks like NVIDIA that have just find buyers every single day?
I don't know. I need to see fear. I haven't seen fear in the market forever. None. It's completely reckless, blind. It's like these videos of people are go to YouTube, you'll see videos titled "People Are Awesome." You see these guys and girls sliding down rooftops and doing some crazy stuff, hanging over this and by one hand and from 1,000 feet building or something. It's just there is no fear in the market. So why should I sell if I'm not afraid? Until I see some fear, and I'm not talking just by the VIX. The VIX is kind of like a tricky to read these days, but that's just one part of it. But the fact that it's like we're programmed to buy bad events. You wait for the headline of that bad event and then buy, because that's what happens. Well, now that's what happens, but that's not what should happen. So, there's no fear. So you can't just fight all these brave traders. You have to be very, very cautious with it. And it's okay to sit out. Like, I've been publishing the weekly trades and I say, it's okay to set them out, especially for somebody that's not actively trading. So my fast friends are finding it a little challenging to trade because it's not typical reactions that's going on right now. But the ones that don't usually do it, all they know is buy every dip, and they've been doing well, and it's been working.
That's worked for 7 years, 8 years.
And this year was like a shrink it the whole 8 years. Shrink it down to just last 6 months or since February, I should say. It worked like it was a picture perfect example of buy every dip. And it's just not my nature to do that. So I missed out on some upside, but I still trade the fundamentals. And I know in the long term, I'll come out of it better.
Speaking about buying dips, I want to get your thoughts here because obviously there's not a lot of dips to buy, but in Alibaba, it has had a dip. And I mean, Alibaba had a pretty incredible 2016 all around because started the year down around $60. And well, actually, I guess the start of the year at $70, then it dipped in just at the end of January to $60. And then it almost doubled and went all the way up to $110. It's pulled back off those highs here now. We're back down at 86.79. Do you think it's safe down here to start maybe nibbling on some Alibaba, either via selling puts, or do you think you're early here and, this is trade, it's maybe still got some more downside to it?
Well, it all depends. It is in a zone that's pretty interesting longer term for Alibaba. And let me see if I can unclutter the mess and post a chart for you. But if I wanted to enter Alibaba, and I would nibble, whenever I'm not sure, why go all in? So why not just take, if you usually take 10 contracts, for example, it's just okay to take half. So if the trend shows that it's at the lower end of a channel of source, like regression to the mean, it should rise again. I happen to like it, and that I do sell puts in it or credit put spreads when it gets hammered. In my hands, I would trust a credit put spreads, but out in time and further down. So just like I told you on Twitter, the best way to trade Twitter, which by the way we probably should revisit, is to sell a put that you don't think it's going to get to, or a put that you believe that it'll be a good buy there and you're okay owning it and you're able to own it. So with Alibaba, it's kind of the same thing. The one thing that worries me is the FXI, and I did post a chart on the FXI ahead of time, and I said, okay, so it could get swept up in some a bad headline there or bad trading. So you have to look at that as well. And this is a chart I posted, and the line I drew, the downside target was almost met perfectly on the FXI. So they kind of look like they've had as bad a time lately as each other. So you have to look at that as well. But yes, it's okay. Credit put spread, again, if I'm not certain, I think it's coming to a point where it can be, I can go along it, but I still have some doubt. I just nibble. So start the position, and if you like it for the next couple of days, then you add to it. If you don't, you can either roll out of it and just close it for partial. That's the good thing. I mean, you can get in and out of these trades. You don't have to hold them through expiration. So if you decide that, okay, it didn't go my way, or I don't like it, or I have seller's remorse, you can buy it back for partial gains or losses. No harm, no foul.
You mentioned Twitter there. Looked like we have some year-end tax selling. Also, a few executives leaving here. I think I know what your mantra is going to be on this one, Nick. But looking at the 16 level, looks like we filled all our gaps in here. Give us your take on Twitter.
Twitter, I still don't believe in the management. I don't think they've proven that they can't monetize it, or they refuse to monetize it the way everybody thinks it should be monetized. It should be, in my opinion, fundamentally, it should be like pay-per-click for businesses. Why should any major news outlet be able to benefit from Twitter for free? If I click on the Wall Street Journal's link and I land on a page where they can monetize me, why shouldn't Wall Street pay Twitter a few pennies for it? That's how it happens on Google. If you paid search, unless you're really good and show up on top, very few do that. You have to pay for your search results. And when you benefit from it, you have to pay for it. Technically, it's vulnerable. I posted a chart that shows something pretty scary, but that will put it to an all-time low again. So if I want to wait for that headline of buyout, I definitely would want to do it by selling puts or put spreads on it. And it's been a winning strategy because they've expired worthless. Every time I mentioned a level that's pretty dang low, and it doesn't get there. It gets hammered. And if I really want to own it at that price, I don't worry about, okay, my sold puts are getting too expensive for me to buy back, because I don't care. I'm gonna I'm gonna end up owning Twitter, excuse me, at that price anyway. So fundamentally, I don't think they've got what it takes. Headline wise, I don't think they get bought out anytime soon. And if so, the price will probably be disappointing. I think anybody can build a Twitter in a week, and not anybody, any mega cap, but they probably won't have the Twitter brand with it. So yeah, it could be bought out, but I'm not going to buy calls and hope for it. I'd rather sell puts.
Well, that's the other thing, competition here. I mean, there's a lot of other social media platforms here now with Instagram. You've got Snapchat. You've got so many other things here now. There's a lot of competition here for it. And you look at this thing, and I haven't looked at the market cap, but last time I looked at it was $10 or $12 billion, and you wonder maybe it's still too pricey.
Maybe the government should buy it. I mean, if Trump uses it all the time, why should he have it private?
You got to think like Trump should be helping this stock, though. I mean, he talks about Twitter. He's tweeting on Twitter market-moving events. Yeah, you look at Twitter here, and the stock is just a dog. I mean, really, with Trump, being elected, it should help Twitter, and it hasn't. It's been straight. It had a little pop, after, but it's down significantly now since the election results.
Yeah, and he didn't invite the management to the Kiss the Ring ceremony that they had the other day. So he had everybody come back crawling. Maybe they said thank goodness he didn't invite us, so we didn't have to explain to our employees why we're meeting with Trump. So like Apple CEO did. So yeah, I don't know what it is with it. There's something going on with their management that it always comes across like they don't like being public. They shouldn't probably not gone public because if it was private, people would have thought, oh my gosh, this is one thing we want a piece of, and now nobody wants it. So yeah, I have my doubts about management. And again, if I believe in the buyout headline that's coming, I'd rather have that buyout coming, allow me to sell puts under it, because there'll be buyers that buy that headline, rather than me be the hope guy and buy the calls and have them expire worthless unless I time it perfectly.
Let's talk Apple.
Oh, go ahead.
Let's talk Apple, and then Joel, you can finish up. But I just want to say, Apple. The media seems to always get this one wrong. As it's coming down, everybody hates it. As it's going up, everybody loves it. This stock, if you've been playing contrary to the median for the last, I feel like, years, you've been making money off it here. Everybody's starting to like it here again, but I look at it and I see lots of overhead resistance from all this way 116 all the way up to 120 here. I own in my investment portfolio long term. I agree with, I don't always agree with Kramer, but the one thing I do agree with him, he says you just got to own Apple. It's one that you just need to own in your long-term investment portfolio, and that's been great, because it's been one of my stocks and it's been a good one. But do you think, that they're going to finally get something? You joke about the flying car and stuff, but do you think 2017 is the year that Apple comes out with something that wows us again? Or is this just going to continue to be a cash cow, just iPhone, that's it?
I have little faith in Tim Cook. They say he's a good operator. But he's been, I have to say it that way. I mean, I don't mean it demeaning, but he's been showing gutless. He's been gutless in his foresight as far as something new. Headphone company, taxi company. I haven't seen anything that exciting. I think they're missing the innovation that came from, or maybe the cockiness that came with Steve Jobs. I mean, he knew what he wanted. He wasn't afraid to try it. He wasn't afraid of failure. And when he failed, he told you to your face, you're wrong, and forget about it. And everybody did, like antenna gate and whatever. He told, okay, fine, we may have a problem with our antenna. So what? Here's a free case. Get off my back. And gone. Nobody's talking about it. So it's different. I need to see better. I always said, give Apple to Bezos, and it'll be a monster again, with monster, future ahead of it. Right now, I worry about it a little bit. It's still I use somebody else's term, an iPhone company, and when it's big money and it's prints money. They say a lot of everything, but it's dangerous. What if that thing is no longer a hip thing to have? But it still attracts people. My son just switched back from Android to Apple. So he's 15. He switched from Apple to Android and then back again. and he'll do it again probably soon because what his friends are having at school is what makes him go this way or that way. So good company, great products. The future is not as sure as it was. Longer term, shorter term, it's a big boulder. You can't stop it. Price wise, I just posted two charts, both technically positive, but they have a wall to go through. At 110, there was a little wall there. 112 and change, I think we talked about it before, another wall. 113 and change, they busted right through it with big trades. And then here we are at the mouth of another technical upside for it. So if I wanted to hold long calls in it, I could probably finance them with credit put spreads or something like that. Especially if I don't mind owning Apple, I'll probably sell naked puts, but out in time, way lower than current price. At prices I am willing and able to own the stock.
Phil Chen's asking a question that relates not only to Apple but other companies that have money overseas. Repatriated billions of those dollars to appease our president-elect. I mean, what kind of impact do you see that have on Apple and also other companies in that same situation?
Well, in Apple's situation, since we don't see them doing anything with the money, they're probably going to prop up the stock price with dividends and buybacks, which is pretty crazy. I don't like what he's doing. It's better than issuing debt. And if you look up a balance sheet of Apple for the last 5 years, your jaw will hit the floor. How they went from zero debt and then now they double their debt every year or something like that. It's just crazy numbers. Fine, he's propping up the stock market. I mean, his stock price with buybacks and dividends and giving back. But issue all that debt and.
That was from the media. That was pressure from, that was pressure from the media because Apple had no debt, and they were saying, "Why does Apple not borrow? It's cheap to borrow. They can make the money on the money. Why do they not borrow more?" People were talking about that for years, and I don't know if Tim Cook, he shouldn't be listening to the media. And I don't like the fact that they did it either.
Right.
But that was definitely pressure from the media. They're saying this low interest rate environment, it's crazy not to have some debt in there and use that money because it's cheap money.
Wouldn't be the assumption to do something with the money and create another thing that actually keeps returning money back as opposed to dividends and buybacks that happen like here and there. But buy whatever, buy something that's actually making money in whatever industry you want. They have the potential to buy the number one position in any industry they want, and they lost it or they're losing it. So the more debt you have, the less free of that cash hoard you actually really have after you pay taxes on it and whatever. So it has so much potential, and it's dwindling every year with just this Tim Cook era that's just kind of boring. Well, the old era was cocky, and it was full of promise. And hey, he can come up with anything when he walks on stage. What does he have in his hand, or what's he going to say? We're talking about jobs here. So they missed that, I think. Now they're apologetic more about things they shouldn't be, and then they stuck their ground to the one thing they shouldn't have with unlocking that phone one time. I just don't like that part of it. But as a stock itself, I mean, it's a solid company that produces unbelievable numbers, has an incredible following. So it's hard to bet against it. Technically, it's kind of frisky right now, and calls into the year would be good. Or I can play it via calls in the Qs, for example, because there's a pretty heavyweight in there, and it's got infectious. So if it rallies, Facebook will rally, Google will rally. But technically, it's looking good. If it breaches another couple of bucks, it could probably spring higher.
All right, Nick, we're keeping you a little bit long here, but just a final question here. 2016, the Brexit, the change, in the White House here. Could 2017 be as exciting and market moving as 2016?
It was an incredibly exciting year. The events that I have on my calendar now are not potentially as exciting. I mean, we're still dealing with Brexit. Supposedly, we should learn more about it in the first quarter here in 17. Maybe we won't have a Brexit. Now they're talking about some adjustment period and whatever, and that could be exciting because supposedly Brexit was scary, even though we bought the hell out of it. So maybe 2017 we get another push of that same headline out. I think OPEC will be exciting to watch and see if they actually surprise us with the cut. But nothing as exciting as what happened is imminent. But we'll see what it's like. We priced in a perfect Trump scenario. how much we chip off of that perfect pull is probably what we're going to be looking at in the first quarter, or at least first half of the year. But I don't see anything like trigger.
All
But
right.
maybe we'll see.
All right, Nick Shaheen, options expert, author of Create Income with Option Spreads, joining us here. Great wrap, Nick. Looking forward to talking to you next Tuesday.
Likewise.
All right.
Thanks, Nick.
All right, a lot of good input there. Dennis, S&P still just crawling up, making new highs of the session, up 2.25. Hit us up with some of your holiday Christmas strategies.
It's the same thing this week. So just like we talked off the hop, this is a week where the strong typically get stronger and the weak get weaker. It is starting that way when I see stocks like Nvidia taking off here once again. I mean, what's going to derail that? Like you said, Joel, if you're sitting on gains and you think, taxes are going down, probably going to wait till January 1st to book those gains. So people are sitting here, and then not only it's going up more because window dressing. Portfolio managers want that in their portfolio there. So the strong typically get strong. You just wonder if it gets crowded, and then maybe it does it the day before or something, just to, because the market tries to always punish the maximum amount of people. And I wonder, a day or two before, you kind of, I think NVIDIA is going to have a sell-off here. It's a matter of, is it going to really come at the 1st of January, or are they going to hit it a day or two early just to, fool everybody, because the market tries to always fool everyone. So I'm cautious here now. It's run so far. It's up another 2 points here in the pre-market. I think, it could continue to show strength this week. I definitely think they hit it in January. It's a matter of whether they hit it a day or two before, just to fool everybody.
All right, I just wanted to touch on Facebook here. I mean, constantly in the news with the fake news and stuff, holding on to that 115 level. Probably a very good year here for Facebook. But I mean, when is all this this bad? I mean, if the bad news is not catching up with this thing yet here, will it ever? I mean,
well, Facebook really didn't have a good year, though. If you think about it, Facebook started the year, okay, well, it started the year around $100, but I mean, beginning of January, it was 112, 113. We're at 117. So really, for what all the other stocks we talk about, the banks talk about, Facebook has been a laggard, and Facebook had to have that because it had so much incredible runs. I mean, you look at it on a monthly chart from 2013, really since that Barron's article came out in 2012, we went from $20 up to 120. It was an incredible 2.5-year run. So 2016 you could call the year of consolidation for Facebook, the year of pause, digest the previous move, let valuation come down a little bit, as the earnings come up, and maybe eventually it does continue its run up. I'm not going to fade Facebook because everybody is on that. It's like seems like billion users or whatever they have, or even billions of users they have now. People are schedule all their stuff around it. I mean, it is part of everyday life for a lot of people. Not me and you, Joel, but a lot of people. So it's hard to bet against that too. It was a slow year for Facebook, but who knows? That trend could start resuming again if they come out, with something else. Could start popping again too, but as of right now, it's a little bit too high a valuation for me personally. But I do like the year of pause here, where let's valuation catch up a little bit.
all right, and just talk about the financials here. I mean, a pause in the action here. XLF had that great run. This is looking at it and a monthly here, and now it's just quiet. A consolidation. Bank of America been hanging out here. This is going on the daily chart, kind of reflecting the market here. Big hopes for these in 2017. You getting itchy to add any of these to your portfolio, or are you going to wait for a little bit of a pullback?
No, I think you could see it strong again this week, again, because portfolio managers playing catch up. They want to have some banks in there. Same thing applies to a stock like NVIDIA. I know, completely different sector, but these have been, two stock or the financials, NVIDIA. There's been certain stocks that have just been strong. And like I said, this week, typically the strong get stronger, the weak get weaker, and that trend often reverses when we get into January. So I think you see some continued strength a little bit this week in the financials. Very cautious going into January, though, because there's a lot of people sitting on big gains. And if you're saying the same thing, that you don't want to book the gains because you think the taxes are going down, it applies to the financials as well. So I would not be surprised to see first week of January some pressure in some of these financials.
All right, S&Ps, one tick off the high of the session, 22.62 All-time closing high, 22.6650. The all-time high print from December 15th at 22.7350 and 20,000. If you're looking at the Dow, just above that. 9 o'clock, running a little bit over. Spencer, you want to wrap up the show and preview Wednesday show. Tomorrow is Wednesday show.
Tomorrow is Wednesday. Thank you very much for reminding me. We have two guests on for you tomorrow. Michelle Krebs, senior analyst at Auto Trader, and then Mark Shore. He is of Shore Capital Research. He's got more than 25 years experience in the investment and research and portfolio management spaces. So, yep, that's it for us today. Thanks for listening, everyone. Hope you had a good holiday weekend and a good start to the week. We'll be back with you folks on Wednesday.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.